and gentlemen, welcome back to the channel. We have a pretty crazy update to bring you, I guess. I honestly, I'm kind of shocked. I don't know what to make of it in light of what my prior opinions were. It's weird. And it has to do with what the White House just said and the implications possibly for the markets. Now, in the coming hours, we hopefully will see the government reopen. And then from there, what's the next step in this market? I mean, today was another really rough day for Tesla. It was another really rough day for the higher growth areas. And there's a very obvious reason for this, and that is Wall Street is nervous about the economy. And I don't think a lot of people fully understand what's going on right now, so I want to share that as well. Now, we're going to talk Tesla specifically. We'll look at the option activity, what the short sellers did today, and again, some of the shocking news coming out. But let me know your thoughts on this down below in the comment section. How are you investing right now? Are you selling stocks, buying stocks? Are you in cash? Are you just buying Tesla and maybe being very selective? Let me know what you guys are doing down below in the comment section. If you guys would like to come join the trading community, check that link out down below in the description of today's episode as well. But with that said, let's get started. So let's start with the first shocking thing today. Okay. The White House, Caroline Leavitt, says that October jobs and inflation data may never be released because of the shutdown. Now, this just makes the whole situation even weirder. And I was shocked to see this headline initially come out because everyone was expecting that we would get the jobs numbers and CPI report. Like, nobody had it in the cards that we were never going to get that data. That just, nobody had that expectation. Now, it says here, quote, the Democrat shutdown made it extraordinarily difficult for economic economists, investors, and policymakers at the Federal Reserve to receive critical government data, Press Secretary Caroline Leavitt said. I mean, that makes sense if people like maybe were not working or not collecting the data or something like that. But you know how this reads to Wall Street? My first thought was, oh shit, it must have been really bad. Like, so bad they're not even going to release it. That's how it reads. If that's the case or not, I'm not sure. You've heard from, Scott Bessent, that's the Treasury Secretary, Kevin Hassett, the senior White House advisor. They've all said that the economy took a hit from the government shutdown, that, it was harming the economy. And then you have the government that's saying, hey, you may never know what the jobs numbers were for October or CPI. And it's definitely not adding to any of the certainty out there that Wall Street has. Now, you can make the argument, what if we were going to get a negative 1 million jobs report or something like that? That's a one-time thing that was from the government shutdown. That's not necessarily like indicative of the economy. Is it better to just not get that data from a stock perspective? Or is it better to get the data? Probably it's better not to get the data. So careful what we wish for here, I guess. Nothing is for certain. The BLS has not actually said whether we were going to get this data or not. But again, it does read like the numbers were so bad they don't want to release them. We'll see. Now, Kevin Hassett and Scott Bessent, they have reaffirmed that next year is going to be a really good year for growth. I agree with that. It's kind of hard not to, when you have such a large tax break coming for so many people. No tax on tips, no tax on overtime. That's going to save families thousands of dollars. Hopefully, we continue to make progress on inflation. That would be the expectation. That's going to allow the Fed to cut rates. That's going to bring down 10-year Treasury yields. That's going to spur mortgage and home buying demand. And that's ultimately going to lead to hundreds of billions of dollars of equity being converted into zeros in bank accounts. And that is a material driver for this consumer and for the economy. And let's face it, the last time we really had like hyperinflation where every time you looked around prices were going up was like 2023, early 2023. So consumers have had some time for wages to catch up to some of the inflation that's out there. So the timeline makes sense why next year is going to be a good year. And there's many of reasons to believe that. AI is alive and well. That's another one that I would put in there. But investors, they care about what's happening right now. Okay. Now, stocks have already reflected this negative sentiment, this recession fear already. That's why the small caps and the AI stocks and the hyper growth stocks have all faltered. In a good economy, you can basically take a company's numbers on face value, right? If a company says they're going to do X, Y, Z in revenue next year, blah, 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 you can generally believe that if it's a smaller cap company, let's say. But if Wall Street thinks we're going into a recession, or the economy is just going to continue to weaken, which is where we are now, that's Wall Street's expectation. If not recession, continued weakening, then Wall Street doesn't even care what companies say because they're like, if things get worse, you're not going to hit those numbers, even if the company will hit the numbers. Okay. That's why big tech tends to be favored because they have a lot more visibility into earnings, much more established companies. They have more levers to pull. Okay. Now, for Tesla stock specifically, it's a really good sign Tesla has held up as well as it has. Okay. Despite, a lot of your small cap stocks down anywhere from 20% on the low side in the last 6 weeks to 60, 70, 80% on the more extreme side in the last, 5-6 weeks. Tesla has done very well for being a, higher growth stock, higher value stock, a quote unquote, meme stock, as some of Wall Street would call it. Tesla looks pretty good. Now, the government is supposed to reopen hopefully tonight. There's going to be a vote on this. If the vote passes, the bill is going to be sent to Trump immediately, and Trump's going to sign it, right? Which would mean the government would likely reopen by tomorrow. At that point, you stem a lot of the pain, right? The effects of the government shutdown begin to end, and we get back to more of a business as usual kind of thing. See, the problem was we were heading into the government shutdown, which is now 1 days in, something like that, 41, 42. And the economy was already not in a great place, most of Wall Street believed. And now 41, 42 days later into the shutdown, you can understand why Wall Street is nervous, okay? And why they've been selling the risk on areas. But that could end tonight. And that's good. But then we want to see how the economy is doing, okay? Is it in a recession? Is it not in a recession? Is it trending towards recession? Nobody has a clear understanding of that. If we don't get the October jobs report or the CPI report, then we might not get clarity on that for a while. But Friday, we will get retail sales data, and that will tell us a little bit more. If retail sales comes in good, then that's great. We should be getting initial jobless claims as well, because that is all, filed on the computer. People, filing for unemployment. We should have a pretty good understanding of what initial jobless claims look like. And we should be getting that, I believe, on Friday, if not tomorrow, if the government reopens. We can actually just go ahead and look at that. Yeah, so it would be business inventories, retail sales, PPI potentially coming out on Friday. Tomorrow would be initial jobless claims and the October CPI report. if we are actually going to get that continuing jobless claims and the 4-week average for jobless claims as well. But now it's a big uncertainty if we're going to actually get that. So what happens from here? If the government reopens, it is likely a positive catalyst for this market. Okay, that could happen overnight at some point tonight. But it's not the end of this pain that we have experienced in markets. Okay, until Wall Street is cradled like a baby and convinced that the economy is good or bad or just any kind of certainty, the pain is not over until then, like officially over until then. Now, for a lot of people that are a little, confused on why big tech has done so well, why small caps and AI and high growth has not done as well, it's pretty simple. If you were a fund manager, and let's say, better way to put it, if you had $1 million of your parents' money or whoever's money that you're related to, and that was their literal life savings and retirement, and it was your responsibility to make sure they did not lose that money no matter what happens, you're not going to be putting that into small cap AI stocks when the government shut down 40 days and the labor market looks weak, right? Hopefully you wouldn't. Okay. Well, that's what hedge funds are faced with right now. When times are good, it's pretty easy to be long in risk assets. But hedge funds and institutions, they are positioning themselves to win or not lose too much regardless of what happens. And when recession odds are this high, the downside risk in a lot of small caps is too large where they don't want to take on that risk. So what do? They buy Apple. They buy Microsoft. They buy Google, right? In this case, recently, they've been buying Tesla, which is great. But it leaves all the other stocks for dead, essentially. Okay? That's why this market, you've seen things like the oscillators trigger, the Titanic signals and Heisenberg indicators. It's because this market is two-sided. If you're in index funds, you've done just fine. If you're in small caps, you've gotten obliterated. Okay. If you're in AI small caps, you're crying right now. Okay. That those things don't necessarily indicate that the situation is going to get a whole lot worse, but it does indicate that things are bad right now. Okay. For anyone that's asked about the Titanic signal or Heisenberg, trigger or any of that stuff, I don't typically read into that stuff too much more than just what it's already telling you, which things are bad, things are weak. So we'll have to see what happens, but we need some kind of clarity or understanding on the economy, some kind of uniformal understanding of the economy. There's some people on Wall Street that think things are fine, but the vast majority of Wall Street thinks things are terrible right now. Now, getting the government open, if that happens tonight, booyah. That's going to be really good. That's going to be a good first step. And I think a lot of areas of this market could really use a relief rally. Okay. Like a lot of your AI stocks have RSIs below 30. It's kind of incredible. With zero company specific news, some of them are down 60+%. Just crazy. I've never seen that before. Like, honestly, I've never seen that before where certain, AI stocks are down 60+% without a single shred of good or bad news. Just purely what the markets are doing. Trading at some of these stocks are trading at crazy low valuations, like 2x sales. There's 2 AI stocks that I own, $1 billion or less in market cap, that are growing at hundreds of percents that are trading at less than 2x sales. 2x sales. Okay. Tesla trades at 15x sales. Tesla, well-established company. You get the idea. but it's not growing at hundreds of percents. Like some of these stocks can't get out of their own way, even if they are dirt cheap and hyper growth companies. Either you're buying stocks like that, you're buying those areas that are irrationally low, and you're going to make a lot of money if we don't have a recession, or we're going to have a recession and stocks are going to fall materially further. Now, if we did have some kind of recession, Tesla's going to fall a lot as well. Okay. But it's the better of two evils to, befriend, if you will, Tesla versus other small caps. And generally, Tesla has done very well throughout all of this. It's honestly surprising. Like any other time before, Tesla would be at least down 20-25% right now. But it's not. It's done quite well. Option activity today from hedge funds and institutions coming in with about $89 million worth of option activity with a positive order value of 60%. So, looks pretty good, but definitely a slower day. And here on the day today, you had about 160,000 shares that were covered by hedge funds and institutions. So they took the chance here with another weak day for Tesla to get out of some of their short positions, which was probably a good thing. Okay, so just to confirm here, government probably going to open tonight. That's great. If that happens, awesome. You stop some of the damage being done to the economy. That's awesome. But then you need certainty on the economy. And depending on if the economy is better or worse than expected, that's going to drive the next move in this market. If we're in a recession or Wall Street continues to think we're in a recession as they have been, watch out below. Tesla's going to fall. Everything's going to fall. You've seen big tech fall a little bit more today, and there was a lot more of the rotation, the value rotation, whereas big tech started to fall. Small caps have been falling, and they continue to fall today. If the economy is better than expected, I firmly believe you get this year-end rally because a lot of this market is, again, irrationally depressed right now. Okay? Retail investors have long got margin called at this point. They're so over this shit from the ones that I've talked to. They're just ready for any kind of a rally at all. If you look at the headline index, it's done okay, but under the surface, it's really bad. If we get better than expected economic data, which isn't going to be hard at this point when expectations are so low, then that's what gives you the end of the year rally. Now, you're pretty much at a shakeout moment in a lot of stocks, and what comes next is going to be critical, like make or break kind of shit. When recession fears are this high, if you confirm a recession, even like 2022, you don't necessarily have to go into a recession for recession odds to hit 100%. I would say right now recession odds by most of Wall Street standards are like 60 to 70%, based on where your hyper growth stocks are trading. Like, just look around. They're all destroyed. All of them. Okay. But you could get to 100% chance of a recession per Wall Street. That would be like 2022, where literally you're talking everything down 60 to 80% under the surface. Index falls 20+%. Mag 7 holds up a little bit better, but everything else gets destroyed, right? That's the next step of this. Okay. If the government opens and the data is worse than expected, like there's no other way around it, you're looking at some pretty crazy downside. If it's worse than we already think, it's over. It's a wrap. Okay. Better get ready to buy for some months. Okay. If it's better than expected, you're set up for a massive rally. And you're really at a breaking point at this moment. I think you're getting very close to a breaking point to the upside or the downside. Okay. Like it could break in either direction. A break doesn't necessarily have to be bad, but it definitely could be. And, well, we'll see what happens. Let me know your thoughts on this down below in the comment section. If Tesla were to break to the downside, I mean, you're looking at the stock heading back into the low 300s, if not 200s. Honestly, I would love that. I would love to buy some Tesla in the 200s again. That's not my base case. I would expect a break to the upside in my base case scenario. But, yeah, some of this shit is shocking. Like, why is the government not releasing the data? Do they really not have the data, or is it just so bad they don't want Wall Street to freak out? Like, some of that makes me question my thesis of the economy being better than expected. I just haven't seen much of a change out there. It seems like things are pretty business as usual. They were just as good or bad as they were before. But yeah, nonetheless, I'm pretty shocked. So again, let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come join the trading community and come invest with us. Okay. This is a long journey that we're on, and we are at the very beginning. What we do is go out and identify the stocks that are under the radar. Like I said, I'm heavily invested in 2 stocks that are $1 billion market cap or less, that are trading at 2 times sales or less, that are growing, both of them, at hundreds of percents. One is expected to grow at over 300% next year per their own guidance, and the other company is expected to grow at like 500% next year. They're trading at 2 times sales. It's laughable. Okay, the kind of valuations you're looking at in some stocks are crazy. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.